Hello. I can't hear you.
You can't hear me at all?
Oh, I can now.
Ah, there you go. So, we are waiting for this. Apparently, it's going to happen in 20 minutes. So, that's going to be interesting to see if that's right, correct?
Yeah, absolutely. So, Matty, shall we do an intro?
Yeah, go for it. My name's MilkshakeMatty.
I'm Paula Talks Crypto.
Paula, can you do me a favour? Can you just keep talking for a minute? Because I need to sort something out on my end.
I can. Guys, welcome to the channel. Welcome to the stream. Tonight, we're going to stream the FOMC meeting conference that's happening because it's really important to consider the implications of potential rate changes in the US. And I think the reality is that nobody's really sure what might happen, even though the percentage value of the chances of there being a cut is high. I don't think everybody is feeling like that. If I'm looking at the charts, I feel like sentiment is still down.
No, I can hear. I couldn't hear you. I can hear you.
So if you missed that, I was just saying I think that people are still really worried about whether or not there's going to be a rate cut. And I think also people in the comments that I'm seeing are saying that even if they do cut the rates, is it enough? And will it really make a difference?
Well, it's a great question. Let's have a little play on this. 1 second. Let's just make sure. Yeah, okay.
Okay. So Pip in the comments is saying we're going up, up, up. So I don't know if you can stick a chart on, Matt.
I can do. Give me 1 second.
The tech whiz. Let's have a quick look at the charts while Matt's doing that.
Today. I don't feel like a tech whiz today. I can add you. 1 sec. Oh, no, I can't. 1 second. I can if I swap that one out. I'll tell you what I can do. I can do...
Oh, we are going up, up, up. Wow. So it went up and it's come down a little bit, but it looks like it's going up.
I'll tell you what I can do.
Dean says, so what do we think is going to happen? And that's a great question, Dean. So I put a poll out on my YouTube community yesterday and it was really split. People were 50-50. Was it going to go up or was it going to stay the way it is? Somebody says nothing major, I reckon. Yeah, and I think you're not alone feeling like that because everybody that's been commenting has been saying that actually, even if they do cut the rates, is 0.25 enough? And if they don't indicate that there's going to be bigger rate cuts in the future, is that going to really affect the markets? So we're going to have to see.
There's not enough liquidity at the moment. We need retail back. I've been saying this now for a couple of days because the more I think about it, the more I think it's right.
But retail's not going to come back until people feel more certain, is it? So I think that's what we need. We need some certainty. We need people to feel less fearful. And if we still look at the fear and greed index, it's still very fearful.
Yeah, 100%. Not even in question.
Pip saying 25 base points, I reckon, yeah. And he's also saying it's sticking to his line, Matty. So the lines that Phil had drawn on his chart in our crypto community chat last night, it's still playing out. Fran says, so far it looks like I'm going to be watching another channel.
Bye.
Hopefully not.
See you later, mate.
Hopefully not.
You'll be sadly missed.
Hi, Sam. Sadly missed. I think we missed him leaving as well. So Pip says, yeah, I think it will help as it's not been accounted for. But once it starts to go, retail will miss the boat. And that's a lot of fear, isn't it? A lot of fear from retail is that we always get in too late. The big boys always know what's going on way before everybody else. And then retail misses out because they're jumping in and FOMOing in, which is, yeah, a real problem.
Sam's got a point here. Yeah, and we wanted the 50 points really, but it's not happening.
Yeah.
It ain't happening.
Yeah. Stone Cold says will be bigger cuts when new chief gets put in. Yeah. And I think just like we were talking about last time Powell spoke, I think how he addresses this and his tone and his feeling about whether things are positive or whether things are negative is going to really have a massive impact on whether or not people feel more confident in the market.
Pip's in agreement with you, mate.
James, 0.25 has been priced in, he thinks. So expect a drop at announcement. Okay. So we were looking at the charts yesterday and we didn't feel like it had been priced in.
Well, until the pump.
Wow, yeah, that's true. That is
I was
true.
saying this into the walk back earlier. When it was this morning, yesterday morning, I saw somebody else saying, oh, it's already priced in. I'm thinking, is it? And then we had the pump, and now you could argue that. Until that pump yesterday, I don't think it was. The problem you've got is the majority of people that are retail investors, they're just not interested at the moment. There is no liquidity.
Yeah.
We need something to spur them back in. I don't know what that's going to be, and this rate cut isn't going to be it.
Yeah.
We need
Yeah,
Bitcoin
and
over
James
100
here
grand.
is
That's what we
saying
need.
DCA in. Yeah, I think you're absolutely right. XRP to the bin.
Is that James?
That's Dalton.
That's James.
Yeah.
I knew it before I even read it.
Another James here says if he says 0.25 then gets hawkish, that will drop price. Yeah, and I think how he approaches his speech is going to have a massive impact.
100%. If he starts talking about the fact that the economy's fucked and this isn't enough to help it, then yeah, his mode is going to have a massive impact. It's going to be more about what he says than what he does, if I'm honest.
Yeah.
Way more, because we know what he's going to do, but we don't know what he's going to say. What's he saying there?
Gold and silver did a similar thing. Yeah. It is absolutely boiling in this house.
I'm sweating. I've taken my jumper off and everything.
It's so hot.
Where is everybody from, actually? We've got somebody here from Portsmouth. Is everybody English, or have we got people from other places as well? I'm going to see if I can change this for a chart. One sec.
So I've had a comment on one of my YouTube videos says rate cuts won't affect inflation. Inflation is cumulative. Yeah. Once it all goes up, all you can do is control its growth. It's difficult, isn't it? Because there are so many factors at play at the moment. I made a video the other day about all of the retail properties that need refinancing in America. They reckon there's something like $1 trillion worth of refinancing that are going to be needing to do over the next couple of years. So if rates are high, then that's going to impact that. I also saw somebody else talking about high house insurance prices. People are really struggling with house insurance in the States at the moment. And again, that affects normal retail trade because people have got less money in their pocket. And if they've got less money in their pocket, then they can't be investing in particularly risk assets.
100%.
100%.
What have we got here? Unemployment and inflation is high. That is 0.25%. If job numbers are bad, then for 0.5%.
Yeah.
We're gonna have to say. Listen, it doesn't matter what he does with the interest rates right now. It's more about what he's going to say. And I think that person there saying if he is hawkish like this, it could be bad. It could be bad. But saying that, the last 2 interest rate cuts, when I've expected him to be in a certain mode, he hasn't been. So I'm at to the point now where I've got no idea what this man's going to say. You also have to remember he's about to be potentially, well, not potentially, he is going to leave. This could be one of the last opportunities to him to have a massive dig at Trump because he does not like him. So will he take that moment, or will he be the bigger man and not do it? I suspect he might try and take some digs here. And one of the ways to take a dig at Trump is by talking about the economy.
100%, because it's so impactful. It's so impactful, and he knows how invested Trump is in crypto. But I don't think it's just crypto. I think it's the market, the wider markets as well.
Yeah, 100%.
Stone Cold says 2026 will be good Q2. See thee in Monaco. Fuck the markets. Dean, I'm glad you got your tangent. Awesome. So I made a tangent video the other day and somebody told me how difficult it was to set up. I was like, it must be Phil that is commenting on that, because everybody else I know has had absolutely zero problems setting up their tangent. And just if you don't know, Phil's phone is broken, so he can't do it.
Phil's phone, he's called Pip Hayes in it, but he's called Phil. His phone got run over by a bridge, right? Now, anybody that can tell me how that possibly happens, Let us know in the comments, because his phone got run over by a bridge. I'll let you work out how that's possible.
James says people have no money to spend. Yeah, that's the problem. That is the problem, because everything is getting more and more expensive.
So if the Fed website's saying at 2:30, but James is saying he's going live in 5 minutes, how's that possible?
So I think there is something at 7, and then I think that the speech by Powell is at 7:30.
Okay.
I don't know what's... I don't know. Okay. And it might not be on this channel if they're saying 2:30. Pip says you'll never guess.
Nobody will ever guess.
Never guess. Ridiculous. No. Oh, he's saying I should have my new phone tomorrow. James sent it.
Yeah, James sent it. James got a special discount.
Awesome. I know we're thinking of moving abroad, Matt, but you don't need to try and acclimatise me before
Mate, I haven't touched the heating. This isn't me. I haven't touched it.
It's absolutely roasting.
You're literally in charge of the heating.
I didn't realise how hot it was until I sat in this chair.
Mate, I'm sweating as well, to be fair. I'm not very well, though. I'm not very well.
Well, they're all dropping like flies in this house, so...
We're still coming down here a little bit, you know.
Yeah, we had that big pump, didn't we? And then it's come down a little bit.
You're still holding it. Bitcoin's still at 92,300. We'll take that. This is not a terrible situation. We just got to pray for him to say nice things. I don't think he's going to, though. I think he's going to put a spanner in the works. I've just got a sneaky suspicion. And he looks like Mr. Burns at The Simpsons, so I don't trust him.
Right, I'm just going to try and do some research to see what's on at 7.
And where?
Yeah.
It's definitely saying 7:30. Well, 2:30.
But I did see that James has shared something in the Wolfpack chat about time, so maybe it's worth having a look at that.
Oh, that's interesting. So somebody is saying, is it a bridge on the back of a truck? I can confirm that it's not a bridge on the back of a truck, but his phone was run over by a bridge.
Okay. Dean here is saying federal fund rate 7 p.m. Fed press conference 7:30.
Oh. Let me go here.
Okay. James is saying it's at resistance on daily descending channel, up or down? Question mark. Yeah.
Great question.
Yeah.
That's a different Dean, Pip. That's Dean Worthington. That's not Dean.
No, I don't think it is.
No, different Dean.
Not having a hot flush, are you, Paula? Yeah, probably.
To be fair, the house is boiling.
It's absolutely roasted.
Like, even the dog's panting.
I feel like I need a fan. Have I got to that age where I need to start like carrying a fan around?
You know, I'm always freezing, but I've just stripped off.
I'm looking at the windows, but they seem so far away.
You've got a fan in here if you want it.
I don't think it's charged, my love.
It is. I was using it yesterday. Yeah, it's on. Oh, it's lovely.
Oh. No.
Thanks,
I'm having fan jealousy.
It's actually, I'm getting a bit cold, actually. I might just... It's so cold in here.
You're a knob.
Oh, it's on top of my bald head. That is really quite nice, to be fair.
And I haven't even got a hairband. Like, it's so annoying.
Right, here we go. What's going on here?
Decisions. Through this education program, teachers have access to classroom-ready online resources for students from kindergarten to
We're going to have to turn them down for a bit.
Videos, classroom lessons,
yeah.
online education.
We're going to see some hardcore American politics adverts.
So it's been announced 0.25 cut
Many of the Federal Reserve System's regional reserve banks.
We knew that. We knew that it's a long time ago. This is not a surprise.
Yeah.
I'm more interested to see what he's going to say because his mode is way more important.
And hone their craft when
I just got a horrible feeling, you know, he's going to take some digs.
And more.
Yeah, and I think you're right. If it is his last opportunity to have a dig at Trump, then yeah, he might just take it. I hope he doesn't. I hope that he acts in a more professional way than that, because he must understand the implications of what he says and the way he says it.
Consumers are empowered to make sound financial decisions.
Yeah, so James, we're not looking for the announcement. We're looking for the speech at 7:30. Everybody knew the announcement fucking 3 days ago, bro.
The broader economy and the Federal Reserve's role in it. Federal Reserve Education is committed to equipping educators, educating students, and empowering consumers when it comes to understanding and participating in our evolving
I think he's going to have a dig. I do think he's going to have a dig.
Visit federalreserveeducation.org to find links to resources.
Can he be positive though all the way through? I don't think he's got it in him. Have you ever seen Powell do a completely positive speech? Because I don't think I have, ever. And I watched too many of these.
Yeah, it's difficult, isn't it? It's difficult to know how he's going to approach it.
The Central Bank of the United States. The Federal Reserve System consists of three main entities that perform key functions that serve the public and promote the health of our economy and the stability.
Oh, I love these adverts.
It's the American political adverts. It's like living in a dystopian future.
And
Yeah.
Open Market Committee. Based in Washington, D.C., the Board of Governors is the governing body of the Federal Reserve System.
I'd turn that down. I didn't think you guys could hear that. I thought I turned it down.
Yeah, I can. Well, it's not very loud, but I can hear it.
Right down.
Consists of 7 members or governors who are nominated by the President of the United States and confirmed by the Senate. Governors are appointed for 14-year terms. The Board of Governors oversees and sets policy direction for the system, including 12 Federal Reserve banks located around the country, which take the pulse of the nation's economic health from a regional perspective.
Right, I'm bored of him. I'm going to turn it back down again.
So,
do we have a cut? Yeah, we do have a cut.
Yeah.
We knew the cut was coming. What we're waiting for is at 7:30. It's another half an hour. We want to see Powell's speech because the tone of Powell's speech is really, really important.
So the cut has been confirmed at 0.25. Sam here says Powell is a dementor from Harry Potter, sucks out the good vibes.
You know what? It's not far off, is he? Really? Let's try and make that
Yeah. James is saying
Bitcoin.
Bitcoin's dumping.
In the financial system.
Is it really? Let's go and look at the
Also
charts.
play
One
a
sec.
key role in another primary
Oh, yeah, it is.
fostering the safety
Had a big
and
wig up,
efficiency
though. Look at that
of
wick there.
systems,
Oh,
including
yeah.
distributing
Massive
currency
up, massive
Bitcoin
down.
banks, operating electronic
Is that just a huge liquidity grab, that?
Yeah,
In addition,
potentially.
The reserve banks act as the government's bank, providing services.
Imagine how many people just slammed on like 100x trades
and
Yeah.
issuing and
trying to catch the
obtaining
direction.
securities.
Yeah.
They also act as a bank for banks by providing key financial services to banks, thrifts, and credit unions. The reserve banks also provide a wealth of information on conditions across the nation. Information that is vital to formulating a national monetary policy that helps maintain a healthy U.S.
He looks
economy and a
plastic.
stable
We're still talking about Powell, aren't we? He is a weird looking dude. Like, there's no doubt about it. I think he looks like the Mr. Burns. Mr. Burns at The Simpsons. That's what I think. I think
This
the
helps
evil
keep the Federal Reserve's
fucking
actions,
factory owner or
policies,
whatever.
and decision-making attuned to what's going on in American households, communities, and businesses, which are the foundation of our economy.
This is an interesting one.
The
Read that
third
art. It's a
key
bit small.
entity
Let's try and
is
make
the
that bit bigger so we
Federal
can actually
Open
read it.
Market Committee, or FOMC.
Everything seems to be converging for XRP to reveal its true utility. The reverse carry trade and the Clarity Act are in preparation, and XRP is the only.
For all Americans.
Hang on.
The
There you go.
12-member
Is the
FOMC
only digital asset with
appropriate
clarity.
position or stance
I don't think it's the only one with clarity, but I get what he's trying to say.
essential
Have we got any news on when the Clarity Act is going to be finalised?
Is it the 18th?
through the FOMC's influence on
Of December?
and credit conditions,
I think so.
which can significantly
Somebody in
impact
the comments will tell us this, but I'm sure it's like the 18th.
So the 18th of December is also when the Bank of Japan are going to announce what they're
Maybe
going to
that's
do
where
with
I
their
pulled that date
rates.
from. That could be where I
Yeah.
pulled that date from.
key Fed entities and the unique
Somebody have a look for us. Let us know in the comments when the Clarity
Congress
Act
more than a century ago
getting
helped promote
confirmed
conditions
properly.
resulting in a strong, healthy, and sustainable economy. For more information
I don't
on
even
the
think the
Fed
date
position,
when it is
visit
even the final. Hasn't it got to go again?
and click on
Somebody
About
else.
the Fed.
Like multi-layers. 18th is the
That would
18th.
not
Yeah, I thought it
surprise
was.
me. Okay. There's a lot going on that week.
Every week there's a lot going on there, isn't there? Right, what's that saying? Only USD1, the WLFI is compliant with the Clarity Act.
Of course it is. Is that Trump's?
Of course it is.
Yeah, that does not surprise me.
Somebody's saying, yet we're still going down. Why wouldn't we go down, bro? He hasn't even spoke yet. It could get fucking worse in a minute. If he comes out hawkish, could be worse.
Yeah.
Everybody knew with this rate cut what the price was already, so there's no shocks. What we're waiting for is what he's going to say.
And I think if he can come up with a timeline of more rate cuts, that's going to make a massive impact on how people feel.
Aston Villa fans saying, oi, oi. If you notice, there's more Aston Villa fans than ever before. Now Wolves are rubbish. I got hammered not hammered, but so many Villa fans in my TikTok live, not yesterday, is it not today? Was it yesterday or the day before? Like loads, absolutely loads of them. And I'm like, where the hell have these lot come from all of a sudden? Now, listen, what goes around comes around. I remember when they got relegated and we were the same, So
listen, we were all stood there singing Mind the Gap, weren't we? So.
Pelters, when Mind the Gap. I remember all that. We were like fifth in the league or whatever it was. So I get it. It's all good. It's all good. I don't mind Aston Villa. I don't mind them at all. They've never been. I detest West Bromwich Albion and Birmingham City, but I'm not by Villa.
James says, once Powell comes out and starts talking, I see BTC dropping below 90k with a dip. But Phil's saying it's recovered the drop.
Okay.
News does this every time. Yeah, I think you're right.
Sell the news.
Yeah. So somebody here saying Clarity Act to be confirmed sometime early 2026.
Can you see all them questions then before I put them on the screen?
Yeah.
Is it like on your sidebar or something?
Yeah.
Oh, okay, cool. I didn't know.
There's another Villa fan there as well.
There's fucking loads of them, isn't there? At least they're not Albion fans. Do you know I've never had an Albion fan rock up yet to comment on a live stream ever? Like, because there is
really?
there are no, they don't exist. I swear they don't exist. They're like this mythical weird bunch that just appear.
Don't mind the Wolves, though.
Yeah, I think most
that.
Wolves fans feel the same. Yeah, we have a bit of banter at the games and stuff, but the reality is, I think we spent so many years not playing each other. There's no real rivalry there. Like, we spent so many years in Division 4, 3, and 2. What was the old divisions anyway? You guys were always in the top, so it never really was. We used to get you in friendlies, pre-season friendlies. You'd never see us getting the Albion as a pre-season friendly ever.
It's Nipsey.
Who's Nipsey?
The Aston Villa fan.
Oh, that's interesting. Look at that.
Right, what have we got here?
Hi, Matty. What's your verdict on our government controlling our crypto? How many zeros is that? 20,000 coins or 20,000 max? So that hasn't been confirmed yet, but they're talking about potential cap on stable coins, but I think it will just be the stable coins that are regulated by them. I think they're teeing up, aren't they, for a digital pound or whatever?
So this is the stablecoin rulebook that was announced back in November. And what they are proposing, because we still have until, I think it's the 10th of February, for people to contest what they're saying. But what they're proposing at the moment is, as an individual, you'll be able to hold £20,000 worth of a UK denominated stablecoin. So we know that actually most people aren't going to be using UK denominated stablecoins, but that's what they've put on the table at the moment.
Although, with the Americans trying to weaken the dollar, we might be better off with fucking UK stablecoins than USDT, to be honest.
Yeah.
Because it's just, he's going to try to devalue the dollar now over the next 3 years. Like, that is going to be his main aim, because it's going to help them with trade globally. So I get paid a lot in US dollars because of business I've got and stuff. So for me, I'm better off getting paid in pounds now. But it's not going to happen.
Yeah.
It's not going to happen. But if they are, what I'm saying is I might not park quite as much in US dollars or US stable coins over a long period of time, knowing that his whole aim is to weaken the dollar.
Yeah.
So as it comes in, I might swap it.
Yeah.
If there was already,
which I think it makes complete sense to do that.
The digital pound, I would be using that now, I think.
Yeah, but we need to understand, if you get to the £20,000 mark, what then happens over that? Because I personally think they will end up taxing it, and you will pay a certain amount of tax on any holdings you've got over that. But that's just my personal opinion. We've just got to see further down the line.
James, you're part right there. That once they get rid of Powell, well, not get rid of him, once Powell leaves and the new guy comes in, that we're looking at rate cuts and all that, but it's more about what Powell says now, and is that going to affect, is he going to stifle growth between that point?
Yeah.
Because what we're looking for here is some positive news about economics to give people more appetite for risk, because crypto is a risky asset, if not the riskiest of all the risky assets.
Riskiest, yeah.
So he can single-handedly stifle charts for a good month just with his words, like. We don't really want that.
Oh, awesome. He's also saying figures show economy is better than they thought. But is that going to be productive for more rate cuts if the economy is better than they thought?
Yep. Yeah, you're right. So I was just reading something else. Thanks for your input. Much appreciated. What were we inputting? I can't even remember. What was his question?
About the stable coins. Because he's saying that he holds 2,000 XRP. So was just concerned about holding values. But
it's about stable coins anyway, bro.
It's about stable coins. It's not about. It's not about.
I think that could come in the future, though. I do think
Yeah.
The way our government is it depends how much they get into bed with the Americans. The Americans have sent their I forget what that bloody word is. Group of people from America, the head honchos, to turn up to the UK to talk to our government about a shared crypto stance. And they want our stance and their stance to be very similar. So the Americans sent their entourage to present to the Brits. And I read the report that was written afterwards, and they said the Brits didn't say anything at all that put any barriers up at all for both of them to have systems that talk to each other and fitted, so that trade between the two and crypto business between the two would work seamlessly. The reason they've picked us first, because our FCA is really, really difficult, and our government also can be very difficult. So they think that if they can get it working with the Brits, then the rest of the world will go, oh, it's easy to do something with America.
Yeah.
So they picked us first. Plus, obviously, we've got a special relationship with the Americans. We know that. Obviously, that special relationship's dwindling through Starmer. He's slowly starting to break it between BBC and Starmer. I think the Yanks are not happy, like. But they also know that Starmer's not forever, so they're clean up for the future, aren't they?
That was going to lead me on to actually what I was going to say next, and we need to look really at
envoy. That's the word, envoy.
Envoy, yeah. What the next government is going to do in relation to crypto, because at the moment, I don't think our government are prioritizing crypto enough, because I believe that there's going to be huge amounts of blockchain technology that are going to be integrated into systems throughout the world, and I think that if we don't move with the times, then we're going to be falling behind, which I guess follows on from a conversation we had last night on stream. We were talking about when we were at Zebu and we were watching Nigel Farage speak and his stance on crypto. So it will just be interesting to see where the political landscape lies in the UK. Because I think we have to keep up. We have to be incentivizing entrepreneurs and crypto projects to be running out of the UK. We need to be incentivizing people to hold crypto in the UK, because ultimately all we're going to do is end up scaring people away.
Yeah, 100%. I said this on the live stream the other day, didn't I? I said about Farage. So some things Farage says I agree with, and some things Farage says I want to punch him in his throat. So I sort of sit on the fence with Farage. And when I went to Zebu Live, which is the largest Web3 crypto conference in the UK, we went there, went and did some content and stuff. And I was ready to watch his speech. And if I'm honest, guys, I'm going to tell you the truth. I was waiting for him to say something I didn't agree with to make the content on it and put it out. And I'm going to be honest, because I knew that I'd do good numbers, right? And I couldn't find a single thing that he said to the entire, hour speech, maybe more, hour and 20-minute speech. Mm-hmm. Everything he said was fantastic. And as somebody that's British, into crypto, he keyed into so many things. Like even, I mean, Paula, you want to tell the story about what he said about being debanked, because I think you've just absolutely nailed it. Before she says this, let me just explain. The room that was there is definitely not his normal voting group of people, right?
Demographic.
The demographic in there was not your average reform voter.
Yeah. And
that was a tough audience. And I'm going to be honest, I expected him to get et alive in there. So I thought, because he's so good at speaking, he'd just move along to the next person, just all the rest of it. But honestly, that's a tough room for him to walk into. There'll be a lot of left people in there. There'd be a lot of people from universities. And as we know, the universities are almost 100% now not the way of politics the way he is. So it's a tough room. And I was expecting him to do well because he's a good talker, but potentially sink in parts. But Paula, tell him what he did, because I know it impressed you, didn't it?
Very cleverly, in his early part of his speech, he said, "I've been debanked." And obviously we know that for a very long time, Nigel Farage was considered right-wing, wasn't allowed to speak, wasn't allowed in to have an opinion said. And that fitted along the lines of a lot of people that were in the same ilk at that same time. And he said, "I was debanked. Who else in the room has ever been debanked?" And people kind of looked at each other and hands went up around the room.
Yeah, it's mad.
And I thought, he teed into something that I thought was massively prevalent for people in crypto, because he was talking about how important it is for people to feel like they have choice over their finances, and that traditional banking does not give people that choice. And in the UK, the Bank of England is very scared of crypto, and the Treasury is very scared of crypto, and the FCA is very scared of crypto. And instead of embracing some of the changes, they're just shutting down the opportunities for people to invest in it because it's this almost unknown entity. And for me, it was impressive to hear somebody that had come from a financial background, because obviously he's an ex-commodities trader, worked in the City of London in the 80s and 90s and early 2000s when the market was booming, and just his desire to get the UK back to that kind of financial hub of the world. So it was really interesting to hear what he said in respect to crypto. Whether or not he's the right person to lead the country, well, that's a whole different conversation. But for me, he was the first politician in a real senior role that was talking about crypto in such a progressive way.
Passionate.
Yeah.
I think what was interesting for me, if we forget about the fact he was talking about crypto, because obviously he was saying everything that I wanted him to say, or any politician to say, and it was refreshing to see. But for me, if he can walk into a room like that, which has the potential to absolutely detest him, and then get a standing ovation at the end of it, that man could probably get a standing ovation in most places. And I learned something that day. I learned something that Nigel Farage is a lot more switched on than I gave him credit for. He is an amazing presenter, and he knows how to read a room. Now, if he is doing the legwork right now, going around the country to different places, different meetings, different conferences, different boardrooms, all the rest of it that he needs to do, honestly, I think that man is probably a little bit more, got more of a chance than people give him credit for. Because I couldn't believe how well he spoke. And I was looking for a problem. I was waiting for him to say something so I could make a video on it. Literally waiting for him to say something. Didn't say a single thing. He was brilliant. But
the problem we've got at the moment is that the Conservatives aren't going to get back in power. Everybody lost faith. That's why Labour was voted in. Labour have come in, and there are a lot of upset people with Labour and how they're running the country. And ultimately, Reform are the next big party. And potentially he will be the United Kingdom. So we just hope that for us involved in the crypto space, we're going to have a leader that is going to be pro crypto and looking at how we move that forward in the UK. And I think what Dean's saying is kind of right. He's saying, and the tax man is running towards crypto with open arms. It doesn't surprise me that HMRC want to start taxing crypto, because they tax every other investment asset
on the
you
flip
have.
Side, though, Paula, they left us alone this budget. Me and you spoke about it. We spoke about it to the UK's #1 tax advisor in the UK.
Yeah.
And privately, we all said this is going to be a bloodbath for crypto.
Yeah.
And they completely left us alone on the budget. Makes me wonder what's coming on the next budget, but they totally left us alone. And I'm wondering if that has anything to do with the meeting they had with the Americans.
Yeah.
It just makes me wonder, because they're going on a tax grab, right? They were trying to raise funds, and that was the easiest one for them to do. And they completely left us alone.
However, if you remember what Jamie said yesterday, crypto tax is a drop in the ocean compared to the other taxes. So maybe that's at play as well.
Ties will strengthen with Farage in office with America, and there's not even in doubt. It's not even in doubt. So
Yeah.
I watch a lot of American media. They absolutely love him over there, you know. They absolutely love him. Farage.
Sam says, if Trump introduces 0% on crypto, would you consider moving to the USA?
It depends what their view is on foreign-based income, potentially. So for us, we are potentially looking at, well, not potentially, we are already making plans to leave the UK, potentially. It's just about where. And for us, foreign-based income tax is the important one. So like most of my I have some American income, so I'd be taxed on that in the American system. But if they allow me to have foreign-based income at a lower rate or zero, then America would be interesting for me. Without getting into it too much, I have access to a lifetime American visa if I decide to trigger it, including my wife. So it could be something to look at in the future, but their tax system is aggressive.
It is aggressive, but there are more tax favourable states.
There are more tax, but they're a whole other thing. So as you know, Paula, I'm registered with the IRS in America, and even their forms, they're vile. Like, they make me
so
paranoid.
Complex.
They make me paranoid.
Yeah.
I don't think you understand, unless anybody's ever been registered with the IRS in America. Like, every form is a basic threat. They started off at the beginning by saying, if you get this wrong, we're going to sue you, send you to prison. Like, they're just so aggressive in their forms. It's like, I know HMRC isn't exactly nice, but they're a damn sight more fluffy when they communicate with you than the IRS. I remember the first time I had an IRS letter. It was I got like an email. And I was like, oh my God, I'm in trouble. Like, genuinely, I thought, oh my God, because I was thinking, Jesus, this is aggressive. So I contacted my accountant that deals with that part of my life. And they were like, they laughed. They were like, not at all. That's just how they talk. I'm like, you're joking. At least 3 times in that, they threaten me with things. They're like, no, that's just how they talk. They're just like covering up bases.
Matty, can you turn your mic up a bit? Dean's saying that we can't quite hear you properly.
What about now?
Yeah, it's clearer for me.
Is that better?
James says that's when they'll implement a 20% leaving tax. We were really surprised that there was no mention of an exit tax on this budget, because it had been mentioned.
So we'd be all right with an exit tax.
Nobody is going to be surprised.
So the exit tax is going to be based on UK assets. So as long as you fuck off your UK assets, it's okay. The problem you've got is if people's lives, their entire income-based businesses are all based in the UK, then leaving, there might be a rush to leave. You know, they might because they can't just bring it in overnight. They'll say, as of this date on this year, that's when that's changing, and we might just have a rush.
Yeah.
Yes, too far away. You going about my mic? It sounds good to me because I can hear myself.
Okay. Neville saying, guys, thanks for everything you do. Got to go and have my tea. LOL. Keep up the good work. So Neville, if you do want to go back and watch the live afterwards, it will be saved onto both of our channels. So feel free to catch up there. Thank you for joining us. Guys, if you are new to our channels, I'm Paula Talks Crypto. This is Milkshake Matty. If you don't follow either of our channels, do give us a subscribe. We would really appreciate it. And if you could also do us a massive favour and just like the live that we're on tonight, because it really helps the algorithm. We have, if you don't know, we have come over from TikTok and we are growing our communities on YouTube. We both really, really like this platform. Everybody on this platform is so knowledgeable in this space, and the conversations that we're having there's just so much more substance to it, and it's been a real pleasure creating content on YouTube, and long may that continue. But it can only continue if you guys want to see it and you want to support it. So please do, if you see our videos, give them a hype. If you're not subscribed to the channels, give them a subscribe, and again, like the live, because everything that you do to interact with our content helps the algorithm, and we really appreciate your support.
So somebody says Cyprus is getting friendly. Now, Cyprus is an interesting one. So we've got no access to an EU passport between us, right? So to go to an EU country and be able to stay there for any amount of time means we need to go and get a golden visa. Now, Cyprus had a really attractive golden visa. It was only 250,000 euros on a property spend. But because so many European criminals were abusing that
I'm
system,
so sorry, Matt. Somebody has just said it sounds like a porn cast now with that sound.
What sound? Oh, because of the music. Hi, I'm here to fix your boiler.
Wow. Sorry, carry on. You were talking about Cyprus.
Yeah, they've pulled it. They've pulled the golden visa. They've completely pulled it. So you can't even go there at the moment unless you've got a EU passport, even if you buy a property. So too late, missed the boat on that one. Maybe they'll bring it back, but
I mean, I would definitely consider
no Feral
Cyprus.
Friday. Should we explain to YouTube what Feral Friday is? I don't know. I'll do a PG version.
Okay.
So inside the Crypto Wolfpack, which is our community, if you do want to join with that, go to cryptowolfpack.co.uk. In there, we do live streams every single day. And there became a culture on a Friday where everybody would finish work. It wasn't me, by the way. I don't even drink in the house. But the members, and they'd all seem to like start drinking on a Friday night stream, and it just got out of hand, if I'm honest. It just get it. If you imagine being down the booze with your mates and talking crypto, it's pretty much what a Friday night stream was, and they've named it Feral Friday.
Yeah.
Milkshake Matty sounds like a porn name. Chess is flying. I hope so. Can we have a look at this? Let me look at my charts. My phone, sorry.
So, I mean, they did have a bit of an increase, and then they came down, and they come back up a bit, and it's not doing huge amounts here.
My chest has gone up. It's about an entry now. Should have added to that when it was down the bottom. They didn't, though.
Yeah. Also, guys, if you are interested in trading, some of the links for the exchanges that we both personally use are in the description of the live. Just so you know, Bitchenix and Blowfin have both reached out to us to give us community discounts for our subscribers. So if you sign up to either of those exchanges using our links, you will get additional trading bonuses. You will get additional sign-up bonuses. They're really looking after our community at the moment, so if that's something you're not signed up for, go and check out the links in the description.
I don't even think I put them in the description. Did you put yours in yours?
No, I assumed you did.
I didn't.
Okay.
I don't have your links, but you can if you
when we have finished, I will add them into the save live.
Or go to MilkshakeMatty.com. Go to MilkshakeMatty.com and you'll go and see there.
Or go to any of my other videos and go and have a look.
Right, only got 2 minutes to go now until we're going to see what he's going to say. I think he's going to throw a fucking spanner in the works. That's what I think. Because I feel like things are going too well. We've had a little pump. The pullback's been negligible. We've had an interest rate cut. Sounds too positive to me. Let's see what he says to fuck it up.
All right,
Mr. Burns. Here we go. Mr. Burns are going to fuck it for us, I'm telling you.
No, I'm going to be the other side. I'm going to be the balance. I actually think he's going to come out and he's going to do the right thing.
He looks like an evil villain's granddad, so something bad's going to happen.
Just he's going to do this with his hands as well.
So he says, thanks for the extra 10% off Tangent. Yeah, man. It's good, isn't it? You can layer them promo codes. So many people do. I'm going to be honest, bro. They didn't tell us that you could layer promo codes. It was one of my subscribers that said, you know that deal that's on? I went, yeah. He went, well, I added a code on the screen and it used your code and their code. I was like, ooh. So I started having a play every time they had an offer out. So that's why we tell people now, use all the promo codes because you can layer them. So when they think they're giving 20% off, you're getting like 30% off, which is ace.
Yeah. And although the Black Friday deal has ended with Tangent, they've launched a new deal today. So if you guys are not currently signed up with Tangent and you're interested in a cold store wallet, they've put a new deal out today.
They've brought back the 1+1 or whatever it's called, and it basically means you buy one Tangent wallet, you have to buy a black one or a stealth one. Stealth one means doesn't say Tangent on it, it's just like a black card. And then you can get the second set for 50% off. And they've got all of them there, the summer colours, the American stars and flags, all of them. Which is a pretty good deal, really fair.
Nice.
Plus you get your 10% off the first one if you use the code of ours, either Milkshake Matty or Paula. Here we go. All right, let's turn these up a little bit. It's a bit loud.
Still the music.
Still lift music.
Or porn music, apparently.
Porn music, apparently. Milkshake Matty Bang Bus.
After recent conversations, Matthew, we do not want to go down that road.
Speak.
He's not even there.
He will be.
Oh, here we go. His Rolex is better than Trump's.
How'd you know?
Well, he's on time.
Oh, okay. Forgot, yeah.
Good afternoon.
Mr. Burns.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a 1/4 percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning.
The US government is sponsored by Apple.
When economically sensible.
That's the press, though, isn't it?
To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals.
Nice one, Phil.
Thank you, and I look forward to your questions.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it is it's partly that consumer spending has held up. It's been resilient, and it to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against a cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and you know, it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed.
You should be saying
very
thank
thoughtful,
you.
respectful, and you just have
is
people
exactly
who have
what we're
strong
praying
views,
for.
and you know, we come together and we reach you know, a place where we can make a decision. We made a decision today. We had, you know, 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, you know, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and, you know, the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in you know, inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're going to look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to, you know, the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions. And we always hope that the data will give us a clear read, but in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do 2 things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did 2 discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall, that was the judgment that we made, and that's the action we took.
And just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in reserves, in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant, as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
no, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to, take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to. And I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say. And that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, it takes, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Just no.
No mulligans.
No.
Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got to, when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very, that's one part of it is inflation compensation break-evens. And, they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. Break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well,
thank you.
You just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation, as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive, significantly positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And, so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages so that people are earning enough money and feeling economically healthy again.
Victoria.
Victoria.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation.
Wake up,
it's
mate.
a complicated, unusual, difficult situation where the labor market
James says
is
you're
also
sliding
under
further
pressure,
and further down your
where
chair.
job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But you know, it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and you know, we're well aware that this is a story at this point, is that if you go
Can't
away
just
from
move
tariffs,
yourself in the screen and look like
inflation
you're
is
awake.
in the low twos, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. You know, we didn't have to worry about inflation. Sorry, about the labor market, because the labor market unemployment was very low. If you remember, when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability, and the best thing we can do there is both to support economic activity, but also, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation.
Yeah, I know. I was just watching the
that's
charts.
Demand. Labor supply has also come down quite sharply. So,
having a pump now, though.
If you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low, if there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect
What do you want to
new
ask him,
claims to
Matt?
go up. It really haven't much.
Every time they put their hands
so
up, I put
it's,
my hands up
it's
as
a little
well.
bit curious.
Oh, okay. I thought you had a
Longer
question.
term, though,
Now watch,
the
every time
question
he
is,
says
what are we
next
going to see
question,
here? And we
the whole
don't,
room goes.
know, but it's, it may be that.
Just want to get involved.
In past technology, really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
the policy what?
On the committee.
Thank you.
Why is there such a division of views between the presidents and the board members?
It's not so stark as that. The views are more varied in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So.
Okay, so we swerved the first question where we can really take a dig at Trump.
Yep.
Okay, fair play.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces
far enough away from 100 then.
Some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people.
Yeah, James, it looks like it's going up.
Housing supply is low.
Yeah, we called it
many people have very, very low low-rate mortgages from the pandemic period, and they kept refinancing and caught the really low. So it's made it expensive for them to move. And, you know, we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and you know, really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address, you know, a secular housing shortage, a structural housing shortage.
I'm on an eat long as well.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, you know, we see higher inflation. As I mentioned, most of the inflation over target is from goods, and we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? You know, so that's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you'll see you see that. I think the other possibility is less likely, and that is just that you know, the labor market gets tight or the economy gets tight, and you see, you know, just traditional inflation. I don't see that as particularly likely. But so I think, you know, again, you know, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had, you know, 5-6 years of 2% productivity growth. This is higher. You know, this is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having, you know, social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. You know, the pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Yeah.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm
Definitely
of
don't
the
take
Fed.
your profits yet.
Since becoming Fed chair, you've seen multiple trade wars.
Depends what leverage you're on.
COVID reopening,
true.
period
Yeah,
of
if you're high
inflation.
leverage, bro, take your
I know
profits
your
now.
term's
Fair
not
play. I
up
didn't
as
think of
chair
that.
until May.
Yeah,
But
fair
I'm
play.
wondering if you've given any thought.
But not
to
financial
what
advice,
you want your
obviously.
legacy to
No,
be.
but unless you're on high leverage, don't take your profits
My
yet.
thought is that I really want to turn this job over to
That's the wrong way round.
whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's, I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman, Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked, while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve.
Yeah,
when we raise rates
we know
to
that,
bring
but he's already
inflation
been for
down,
trading today. We've had
that
these
does
trades set up,
work by
what's
slowing
his
the
name,
economy,
James,
but
for
we've moved
about a
back
week.
our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do.
Well,
and
about 2 weeks now, isn't it,
I would want people to understand that.
If
I
not
think
more.
what people are feeling is the effect of higher prices. There was a global wave, sort of every large economy in the world, sort of every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
Done with him, right?
Okay, so I was expecting him to at least have one dig at Trump. I hoped he wouldn't, and I'm glad he didn't.
He had 0 digs at Trump for the entire time, which I was impressed at, because I did think he was going to cause a bit of trouble today, but he hasn't. 1 second, let me just get this down here. So it's positive. I can't think of anything negative to come out of that, to be honest. I think it could have been a hell of a lot worse. It's not. We'll take it. I think the markets had reacted in a positive way, which again, I was concerned that it wasn't going to. We'll see how this pans out now over the next 24 hours, but everybody's sitting pretty. I know majority of the wolf pack had their trade set for 1, 2, 3 weeks in advance.
Yeah.
They're sitting pretty right now.
It's
interesting to see some of the ones that aren't the large caps that we've been taking, like the chess. I'll tell you what other ones are on. Chess, BNB. One of them must have closed for me.
So,
it's took a profit, so it's gone
the charts are having a little bit of a pullback, and it'll be really
okay.
interesting to see how far it does come back. I feel like it's not going to be a massive pullback, and hopefully that's just going to give it some momentum to go again. Because on the longer time frames, it actually looks really positive for upward moves, in my opinion.
We're still right on that cusp where we need things to get above certain resistances, especially on Bitcoin, XRP as well. XRP actually didn't move. I mean, it had some big wicks up and big wicks down. I don't know if you saw it on the charts, Paula.
Yeah.
Massive wicks down.
Yeah. So James is actually saying here, Matty, it's not time in the market, it's time in the market.
Well, yeah, absolutely, 100%. I couldn't fucking agree with you anymore, mate. Who said that?
Yeah.
What's he want to do? Look at the chest chart. Hang on, give me 1 second.
Put your chest chart on, Matty, is what Phil's saying.
Let me just do something here, 1 sec. Because I think if I go like that, 1 second. Yeah, if I go to there. go up to there.
Yeah, you're right, James. We do need that bounce off of the 93. Hopefully, this is just pulling back with a bit of. It'll give it a bit of momentum to push through there.
Yeah, but XRP is the one. It's just stuck sideways, really. That one hasn't moved much at all, so we'll have to see what's going to happen with that one. What did he want to look at? Chess?
Yeah.
Chess USDT. I'll have a look at it on Binance. Yeah, I mean, that's lovely, isn't it? I mean, we're all in lines on chess as well, so we're all good.
Yeah.
We're all good. But I think we've got some really important zones to look at now. We're looking at 96, 97, and then
thanks, Stone Cold.
101 to 103. They're really, really important zones. I don't even think we've got the volume to get through them at the moment, if I'm honest. I still think we need something positive to happen to sort of spur it on a little bit. But it's good to know that he hasn't done a hatchet job, and we haven't been pulled back, because that was my fear for this.
Yeah.
We already knew what the rate cut was going to be. Made no difference. It's more about what he was going to say, and he didn't say anything that I picked up on that could be deemed overly negative at all whatsoever. So that's another hurdle out the way, because that was my concern for midweek, and my concern didn't happen. So I'm happy now. So now we need to see what's going to happen over the rest of this week, because I think we need something positive. They're talking about the Americans seizing a ship off Venezuela. I don't think that's going to make a massive difference unless Venezuela start taking a pop on the US Navy. And if they do, then we've got a drama on our hands. I don't think they're stupid enough to. Surely they're not. Well, they're stupid. If they even attempt to take it back.
Luke's saying that he can't hear you, Matt.
Who said that?
In the comments, Matty can hardly hear your voice, bro.
Is that better? Is that better?
Maybe you need to turn your mic up.
My mic is on maximum.
Oh, then you can't do that. But no, I actually think that we probably couldn't have asked for better news. Of course, anything to have made the markets go up more, but it was never going to be dramatics, was it? I don't think Powell does dramatics. We kind of knew what he was going to do in terms of the interest rates. I would have perhaps liked a little bit more clarity around whether or not there was going to be rate cuts coming, which we didn't get. We just have to see how this plays out now. Hopefully it does give retail a little bit more confidence to start making some investment trades. James says next time things will move is 10 p.m. UK time when the Far East markets open. Isn't it a bit later than that when the Far East markets open?
No, clock's changed.
Okay.
Yeah, so we'll see. So when we're going to come off this live in a minute now, we're going to have a bit of a break, and then Paula, I'm going to go live inside the Wolf Pack, and we'll still be live streaming past that time, so we'll be able to trade that.
Yeah, definitely.
For those of you that don't know, we run a community called the Crypto Wolf Pack. It is basically a zone for people that love crypto, and it is a community of people that are absolutely nuts, if I'm honest. I mean, when I started the Crypto Wolf Pack, what I didn't expect to do was to gather a complete group of absolute mentalists, if I'm honest. But I absolutely love them.
Absolute legends, you mean?
Yeah, they're just mentalists. I mean, I read some of the comments on there, and I'm just like, wow. But yeah, it's good fun. And listen, crypto could be a lonely place unless you are lucky enough to have your best friend into crypto. So if you are looking for a community that lives and breathes crypto 24/7, then this is the place. We've got education in there. We've got competitions. We've got free giveaways. We've got daily live signals. We've got the lot. But if you are interested, head over to cryptowolfpack.co.uk. Go and click on the Crypto Wolfpack group. If you're not ready to dive into a permanent group, then we also have the free Crypto Liftoff course. It's 100% free, no paywall at all. That will teach you the exact strategies that I use to make money during multiple bear markets and bull markets. It's a complete run through of exactly what our strategies are. There are a little bit more to that, which we can add to it later. But if you are basically thinking, you know what, I haven't really got a strategy, I'm just buying when I feel like it, then you're going to benefit from it. And there's lots of people out there trying to flog you a lot of courses for a lot of money. You don't need to. Head over to cryptowolfpack.co.uk, go and click on the free Crypto Liftoff course and go and get involved. Dolly Blue is saying the best community ever. Love it.
Yeah,
we love her.
We love it.
That's
too.
Mairead, isn't it?
It is. And we talked about it earlier. If you're not currently using an exchange to do any leverage trading or buying any spot, Bitcoin and Blowfin have reached out to us, and they have done some special community bonuses for people that sign up using our links. I've dropped them into the live on my channel, and I'm sure Matt. So if you're interested, they are reaching out and they are giving communities discounts, bonuses, all kinds of stuff that you wouldn't normally get if you just sign up with the exchanges directly. So yeah, go and have a look.
Yeah, so if you are interested in either Blowfin or Bitcoin, go to MilkshakeMatty.com, go and click on one of those and you'll get the deal. What else do we need to talk about? I think that's just about it. I think I've already done 5 hours worth of streaming today, and I'm about to have half an hour break and then probably stream for another, 9, 10, 11, 12, at least another 3 or 4 hours. So by then I'm going to be tired. The dog is fuming, by the way. I don't know if you could hear him crying on the mic. He was in the corner of the room crying because he wants me to not be on stream. But unfortunately, dog, it's kind of what we do. This is what we do, mate.
He wants you to be sat on the sofa with him.
He was crying. He stopped looking at me now. He's staring at the door. So yeah, we're going to do that. So yeah,
oh, bless
if anybody
him.
is interested
Guys,
in
I
joining the Crypto
really,
Wolf Pack,
really appreciate you joining us tonight. It's been awesome. Again, if you don't subscribe to our channels, do give us a subscribe. We really appreciate the whole community here on YouTube. You guys are awesome. So yeah, do give us a subscribe. If you haven't liked the live, please do like it. It really helps the algorithm.
And if you're watching
really
us on each other's
appreciate
stream,
you.
so if you're on Paula's stream, then come and follow me as well. Go and search for Milkshake Matty on YouTube. And the same in reverse. If you're watching me on the Milkshake Matty channel, go and search for Paula Talks Crypto and go give her a subscribe as well. I think that's about it.
We
then,
really
Paula.
appreciate that. Guys, thank you so much. It was been awesome again, and we'll catch you soon.
For those of you that are interested in the ring, I've got a little video for you.